The International Monetary Fund, IMF, expects U.S. inflation to remain high for at least another year or two. Last Friday, Geeta Gopinath, the first deputy managing director of the IMF, discussed global inflation and the U.S. economy in an interview with Bloomberg at Jackson Hole. She noted that except for exceptions like China and Japan, there are high levels of inflation everywhere else. She also pointed out that it is too early to say inflation has peaked due to factors like energy and food prices that are driving it. At the same meeting at Jackson Hole, Federal Reserve Chairman Jerome Powell emphasized that the central bank is ready to forcefully bring down inflation even though it would bring pain to businesses, households, and the economy at large. While reacting to Powell's speech, Gopinath said, "What was great was that he came out as being firm and resolute about bringing inflation down to target, making sure inflation expectations don't get anchored. And that, I think, is exactly what you need to make sure that the economic health of the world is in a good place over the medium to long term." The U.S. Personal Consumption Expenditures, PCE inflation data, the Federal Reserve's preferred measure of inflation, was released on Friday. The PCE price index went down to 6.3% in July from 6.8% in June. But Gopinath warned that a similar thing happened last year, just before inflation went back up. "Now, I would be careful about looking at one data point for the U.S., she noted. "I think last year around the same time, there was a good inflation reading and everybody thought we were on track for inflation to come down. And it went back up again in October. So I think one needs to be very wary about one inflation rating," she added. The IMF's first deputy managing director also emphasized that inflation might remain for several more months. "We are in a period where inflation is likely to be high for a while, at least for another year or two," she elaborated during the interview. Like Gopinath, former U.S. Secretary of Treasury Larry Summers also believes that the Fed's relentless hawkishness, as demonstrated by Powell's Jackson Hole speech, is a move in the right direction. Here's a short clip from Summers.
"It was clear that inflation is the overwhelming priority. It was clear, despite some earlier confused talk about neutral, that he was under no illusion that monetary policy was in an appropriate place right now. It was clear that whatever the academic arguments about demand shocks versus supply shocks said, the Fed couldn't accept continuing high inflation and had to act until it was clear that that was going away. The remarks were very concise. There wasn't a lot of more academic discussion, but there was a statement of being resolute. So I think that's just right. And I think it's also good that after a number of times when the chairman spoke and markets gyrated, at least so far, markets have not gyrated in response to these remarks. So I think the Fed is positioned as well as it can be, given the credibility losses and mistakes that there have been with these remarks, to manage things going forward.
However, U.S. Senator Elizabeth Warren thinks more hawkishness is the wrong move for the central bank. While making an appearance on CNN's State of the Union on Sunday, the senator stated that she was very worried that the Federal Reserve could tip the economy into recession. The senator also reacted to a specific part of Powell's speech. In his speech, the Federal Reserve Chair had said, "While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain." Here is the senator's reaction to Powell's speech.
I just want to translate what Jerome Powell just said. What he calls some pain means putting people out of work, shutting down small businesses because the cost of money goes up, because the interest rates go up.
So it sounds like you do think it's a mistake to raise interest rates again.
I am very worried about this, because the causes of inflation, things like the fact that COVID is still shutting down parts of the economy around the world, that we still have supply chain kinks, that we still have a war going on in Ukraine that drives up the cost of energy, and that we still have these giant corporations that are engaging in price gouging. There is nothing in raising the interest rates, nothing in Jerome Powell's tool bag that deals directly with those. And he has admitted as much in congressional hearings when I've asked him about it. Do you know what's worse than high prices and a strong economy? It's high prices and millions of people out of work. I'm very worried that the Fed is going to tip this economy into recession.
The Federal Reserve has promised to keep raising rates until it achieves its target of 2%. If inflation remains high for another year or two, as the IMF predicts, we could be looking at a prolonged period of recession or even stagflation. Do you think the Federal Reserve can keep hiking for another year or two, or will it be forced to start printing more dollars? Let us know what you think in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.